Good morning, good morning, good morning. Academy 55, David Kahn here at 5 to 8 on Thursday, the 6th of February 2025. Looking at the EUR USD on the 1 minute time frame, essentially with the Academy 55 indicators, and looking on the 5 minute time frame for the zones. That's where we are right now. As you can see, we're in between zones. Let's go and have a look at the bigger picture. Moving to the daily time frame, we can spread this out a bit. These are previous lines I drew yesterday. We still got that imbalance that needs to be filled. But as we can see from today's daily candle, it's a down day where we was mainly up yesterday. Bit of indecision crept in. Buyers tried to get up there, but the sellers pushed them back down again. And now we're pushing back down again, possibly to get into this imbalance area here. What do we see on the 4 hour chart? Well, on the 4 hour chart, we drew a trend line going up through a channel, and we have now broken that trend line. So we are definitely on a downward curve. So possibly we have a better chance of trading with a trend which is down because of what we're seeing there, the bigger picture. And here is that imbalance. If I draw that up a bit more, I don't know why that slipped down, but actually the imbalance is there. Will price heading on to tap into that, which is underneath that support and resistance line. So incidentally, we'll see if there's any other lines that we could draw, any more relevant lines on the 4 hourly time frame. The answer to that is no, not at the minute. So if we go down to the hourly is there, and this is the last one we drew yesterday actually, and no point drawing anymore because that's far away. This line here, we could actually bring that down to there because that's because it's there. We got one touch there and one touch there and a kind of touch there. So that is, oh no, look, that's at a key level. So we'll drag that down to the key level area, which will be important for us if we're on a buy and we get there. Anything with 3 zeros on the end is an important psychological level. Well, it was around about here anyway, roughly. So we'll tighten that up a bit. There we go, back to where we were originally. And here, one touch there, one touch there, and a kind of area there that's sort of supported and resisted. So that's a kind of an area that price will respect. And right where we are now, right where we are now. Touch there, touch there, touch there. So we're coming down to an area where price will respect. Put the candles back on. Put the 5 minute time frame back on. And we will now. So the bigger picture, we're going down, 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 down. But, oh, I've put the wrong, sorry. Take that off again. I wanted horizontal rays because I've got a different color for those because that will tell me where the bottom of the sell zone is and the bottom of the buy zone. buy zone underneath all that big line there we drew for ourselves. And we've got another buy zone down here as well. So I'll put that one in as well also. Right, go back down to the minute. And see what we can see here. I don't usually draw trend lines. We got a massive, well, not so massive. I have to remind myself it's the minute time frame, but we have a sloping feature here. Higher highs, sorry, higher high, lower high. So we break this trend line, we could be going back up again for a retrace. But I won't be doing all that because I don't wish to make the chart too cluttered, and we don't need it to be too cluttered because we're after confirmations of what to do, i.e. price getting into the buy zone here or the sell zone there before we make a trade. But price went into the sell zone there. So he was looking for the next sell. So let's have a look at this one. Sell zone there. You would want to be minimum of 2.2 pips away. So you couldn't get into the trade. You would have got into the trade possibly there actually with 3.9 pips away. Your 2 to 1 would be down there. And as you can see, you're frustratingly close, but not there quite yet. And because price has touched there, I would, if I was taking that trade and I'd looked at the support and resistance lines and I drew them up, because you're so frustratingly close and it bounced off there and more or less touched it, I would have been, and if that was the way I would have played it, I would have been tempted to take my trade there because I was so close to the 2%. But it's not impossible to think that price will get into this buy zone, in which case, thanks to the zones, that one there was a winner. But I won't leave that there because that's just confusing things. So we're after the next buy. So I really like price to get down into these areas here, into the buy zone area, to give us that little bit of extra confirmation. But to do that, it's got to break that support and resistance, which is already resisted once by shooting up again. That's why I draw these lines in, to give you a clearer picture of why price does what it does. Most of the time, price does what it does because it's done it historically. Now, it could have done it historically months ago, hence the parabolic SARs. Because parabolic SARs, these are a point, these also are points of where prices reacted in the past. Doesn't tell you how long ago, could have been months, years even, but it has reacted off those points and also mixed in with the volume. That's why these parabolic SARs are there. And if it breaks those parabolic SARs, it's broke that point. So there is a higher expectation that it would go even deeper. But all these points here have been points in the past where price has reacted, and that's why they are there. Also, the deepness of them will sort of give you an indication of how much volume at that time. So when that paradox are flipped there, because there was quite a distance, tells you there could be a bit more volume going up. Doesn't show you how much, but it's a better indication of volume getting a bit deeper. So if we break this line here, you would indeed have got your 2% from that trade there. And we are then into the buy zone. And the next alert up for us is a buy. But we are dancing around this area here, support and resistance line that was drawn up earlier on. Is there enough volume to break it? Because the EUR is fairly low at the moment, but probability EUR drops into a lower range. Actually tells you that there, look, if you press that button. So we could see the EUR going even lower. Obviously, the dollar is riding high, strong dollar, bringing the EUR right down. Like I say, is it possibly going to tap into this imbalance that was created, that we drew up on the higher time frame? And indeed, you would have got your 2% now if you would have been in that trade there earlier on at 7:30 this morning. So anybody else, and just to remind anybody who actually took that trade and actually won, congratulations. You will not trade anymore today. You've got your 2%. We've got a very low monthly figure to monthly target to go for. So please respect that. Don't need to push it. You've done your trade today. You've got your 2%. This is just for educational purposes only. And any trades that I do take are for educational purposes only. But I'm not naive enough to know that some people do follow me along, but that's, you do you, I'll do me, that sort of thing. So yeah, one trade a day, 2%. If you do a trade and you lose 1%, you can trade again. And if you win that next trade by following the same strategy and rules, you're 1% off of the day, then you walk away. Do that to preserve our mindset, because 90%, even more than that, I would argue, is all about what you think inside, your mindset, how you actually think about things. Because price doesn't care what you think. Price will do what it's going to do. If it needs to go somewhere, whether you need to make this trade work is irrelevant. It doesn't matter to them. So you've got to think and trade what you see, not what you think. But now we are very much in the buy zone. You would think, looking at that we'd at least tap into this, or are we going to bounce and break off this other buy zone here? We will see. Right, so I think we got time to do this. Get rid of that. Let's just
Hi, this is Steve, and in this short video, I'm going to just show you the settings for the Trade Assistant to make sure that you've got the minimum 2 pip stop loss on the Euro USD or any currency pair, and how you set it for if you're trading a commodity like the US 100, because the settings are slightly different. So here you can see we're on the Euro USD chart here. I've got my risk to reward on the Trade Assistant locked at 2 to 1. I've got my risk balance at 1%. Lot calculator is on, and my little purple button here between the buy and sell is also activated. So we're ready to bring the Trade Assistant onto the chart. Now you'll notice here that we've got the stop loss set at 20. That indicates 2 pips when you're on a currency pair. And we can actually change that here by typing over it. So if I type in there 40 and just tab off here, you can see now we've got a stop loss of 4 pips because we're on a currency pair. In this example, it's Euro USD, but it could be Euro GBP or any currency pair. So let's just put that back to 20 for our 2 pips. We'll click off here, and now we'll just put the lines on so that you can see that is showing us 2 pips over here on the actual tool, ready to actually get involved with a trade if that's what we were going to do. But that's not what we're here for now. I'm going to click off the lines here, and what we're going to do is we're going to change our chart from Euro USD to US 100, and I can do that by dragging it onto the screen here. You'll see it now switch over to US 100, and now you can see that stop loss says 20, and that's wrong for a commodity. So what we want to do here is come in here and type 2000. This is the equivalent of 2 pips on a commodity such as US 100. So now when I put the lines on, you'll see we've got the number 2000 here, and if I just zoom around, you'll notice the 2 to 1 still applies, 2000 and 4000 here, where we've got a $1,000 trade in place, risking $1,000 to win $2,000. So that's the number that you need to get your 2 pip minimum on. So the minimum number would be 2,000. You could have anything above that if you're on a commodity like US 100, and the number will be 20, which is 2 pips equivalent if you're on a currency pair such as Euro USD. Hopefully you found this useful, and thanks very much for watching.
Yes, Steve, thank you very much for that. So we haven't missed anything. We're into the second buy zone now. We are in buy zone territory, which doesn't change anything for us because we are looking for the next buy alert on the 1 minute, because that's how it works. You get a buy alert, sell alert, buy alert, sell alert, buy alert, sell alert. So we're waiting for the next buy. Doesn't change from our point of view. Now we got the confirmation of indeed price going into the buy zone. So nothing's changed as far as that's concerned. What we're looking for really is price to come way up here. Minimum of 2.2 pips away. Could be a lot more at the time. We'll see, but minimum, we want to be a minimum of 2.2 pips away. And in anticipation of that wave turning to green, this is where we want to be at the minute. It's not going to work out that way. I've got to drag this across as we progress, obviously. But that's the scenario for the buy we're looking for. And hopefully we might get something like that. But if it carries on down into this imbalance, which is, it might do now, it might do later on during the day, it might even decide to do it next week. It's because this is a big, like, 4 hourly daily imbalance, but it needs to be rectified to bring balance back to the market. Market loves balance, but they can wait essentially as long as they need to wait, depending on the condition of the dollar, how high the dollar wants to be, and how high the euro wants to be in conjunction with that. It's all planned ahead. But at some stage, they will, and a lot of the time, they might use a big red flag announcement to actually spike down there, build that imbalance, and then shoot back up again to disguise the fact of moving where they wish to move it. All manipulation. Yes, sorry if you didn't realize, but if this is a surprise for you, but all price is manipulated, even on the minute. Doesn't happen by accident, but we're following the fingerprints of what they are actually doing, because obviously we don't know what they're doing unless we were really super sleuth like Sherlock Holmes. I'm guessing even he would struggle with finding out what they were doing. So this is where we are at. So indeed, we take the junks position and wait for things to progress. And if it doesn't progress within this time we are together, you either come back again later on today and maybe choose the US 100 this afternoon if you can, or you come back tomorrow, or maybe the US 100 this evening between 6 and 8. Again, using exactly the same sort of strategy, price going into the zones for confirmation, taking the next buy or sell as appropriate, and just following along exactly the same. And because we need only one trade a day, essentially, if we win that trade, we walk away. It's all very easy to sort of unclutter these tactics are here to unclutter your mind, to give you a more like a Zen-like sort of feel. Not getting into that, but be relaxed about it. Don't come to the party in a panic, not knowing what's going on, because we do know what's going on, thanks to the going on the daily and the 4 hourly, drawing your support and resistance lines in. I mean, it's not a big surprise to us that price bounced up there and was waiting for a lot of volume to get over there. It's not a big surprise for us because we know we are now in the buy zone. So you wouldn't want to be taking a sell. One wouldn't with this indicator, one wouldn't offer itself anyway. But if you didn't have the indicator and you just thought, oh, it's been settling up there, let's carry on with no indicators at all, that would be foolhardy. And you wouldn't know about all these things. But now you do. So that should relax you a bit more, keep you calm. It's just having the confidence to realize what you're seeing and pushing that buy or sell button. And these alerts and the red, red, red for a sell, the green, green, green for a buy, even help with your decision making in getting into that buy or that sell. Nice to see so many people on today on Thursday, the 6th of February. Nice sunny day down here in Cornwall today. Oh, that clear blue skies. I hope it is wherever you are. Looking forward to walking Wilbur, my dog, later on. And now we've tapped into this imbalance now. So they've started tapping into this imbalance, chipping away at it. Got a long way to go, as you can see. But like I say, chipping it bit by bit. And doesn't mean to say they've got to do all at once, because there will be a retracement at some stage. And hopefully we'll be able to catch the retracement, but it might not be within this hour, but maybe later. And like I said before, if they do come up and decide to go up here because the dollar is getting weaker, they could use a high alert news to drag price right down to fill out that imbalance and then shoot up again if they need to. Maybe even tomorrow. Or maybe even next week. But it's got to be filled out at some stage. So I'll take that line away now, not to confuse anybody. Keeping the charts as clean as possible. Also, as you notice, I am widening it up so you can see the charts at home a bit clearer, but you should be doing this for yourselves as well. The more you can, it's no good scrunching it all up so it's hard to see. Widen it out as much as possible for yourself so it's easier for you to recognize things. And when you do the support and resistance lines, make sure they are of a color that you will recognize. If you want to copy me on that, so we are coordinated as far as that's concerned. And you know I've got the buy zone and the sell zone in yellow on a horizontal ray. You could copy that so you don't get too confused about what's going on. So this is a scenario now that the sell is flattening out. We either go sideways for a time, picking up the buy orders, depending on how many there are, or we carry on up towards these areas here. Putting on the 5-minute time frame just a minute. Always good practice to take the Academy 55 indicator off as well, because we only operate the Academy 55 indicator on the 1-minute time frame. But I put it on the 5-minute. So we look at the bigger picture. We haven't got any imbalance because that was mitigated by that wick there. See, in that wick there, there's a bit of buying power. We've got a little bit of imbalance here, but that's underneath our entry. Big indecision candle here on the I keep saying big, it's not big really, but it's an indecision candle on the 5-minute. So are they deciding to mosey on up? Again, that's what that means there. That's what they call a doji candle. Well, these are all dojis actually, even that one there. Doji just means a wick above and a wick below with the body in the middle. But this candle here is all buying power at the moment, so the buyers are taking back control at the minute anyway. but we're the lowest we've been for a while now. I'll just put it on the hourly. Yeah, we're the lowest we've been since Tuesday at 5 o'clock, actually. So we're coming down to those areas again. We've got imbalance up here, which I think would be prudent of me to draw in. I don't go normally any lower than the hourly, really. The higher the time frame, the more confirmation it is. So I go settings. It's a cell FVG, which stands for fair value gap, which means it's just an equalizing gap, basically. So we go down to the 5 minute again. So here is where we are. Down to the minute again. And we are still going yet lower, which is unfortunate for us. Because we might not get a trade in. But that's okay. We haven't, the way to look at it is you haven't lost any money, have you? And hopefully, by being here, you have gained a little bit of experience. Even if you take away just how to draw support and resistance lines and imbalance areas of points of interest, but don't get too hung up about them. The most important thing is to realize there's the zones on the 5 minute anyway, these buy zones and sell zones, and the indicators, red, red, red for sell, green, green, green for a buy. They are the most important things. The other things I showed you are just points of interest for you so you can get an idea of why price is doing what it's doing. It's a bit of icing on the cake, but don't get too hung up on the fair value gaps and the support and resistance lines. I know some of you do. It's not my intention to confuse you. I want you to realize that's why they're there and why price is doing what it's doing to get there. And if you can get a little bit of inkling of that, it gives you a little bit more of a feeling inside that you can relax a little bit and not worry why price is doing what it's doing and understand why it could be doing what it's doing. There are a whole load of other things, like patterns and all sorts, but we don't need to get into those. The idea of this is to keep things as safe and simple as possible. Now you see this also just as much are on the smaller time frames, price goes up and down, like down and up in Elliott waves. On the bigger time frames, they do the same thing, and sometimes they can break it into sessions, like we're in the London session now, and in the afternoon it changes over to the New York session. So in the London session, we got all selling, and maybe when New York opens, it'll be more all buy. It may be. So that's a possibility as well. And it all depends on news. there's too many computations to look for, really. But let's just go on the 4 hourly time frame. See this big imbalance here has been swayed in. So that has already gone. So this is the new imbalance bit down here. I notice I've got my trend lines, which I no longer need. So I'm going to get rid of them just to clean up the charts. So I'm going to remove those. And I'm going to put it down onto the line chart again. Now down here is a fairly important area, but we've got all this imbalance here now as well. I'm even going to go on the daily now. Just having a look around. Ah, right, this area, yeah, this we've got a touch there and a kind of, yeah, but that's 30, 53. The 10 pip, it's a kind of important area around here. So one could say maybe it might be heading down to this area here where all the imbalances in is actually before going back up again. Maybe just like it did historically before. And that will cover all the imbalance. Let's go back to where we were. Put the zones back on. And as you can see, we're still cutting into that imbalance. And this is where we are. We have no red flag news, although we like to stay away from red flag news. Red flag news makes the market move, but we haven't got any. So I guess they're getting on with the job of rebalancing the market. Nice day today, although it's pretty cold. We haven't had no snow yet this year. It fluttered a bit once, oh, a couple of months ago, but didn't stick. Did on the higher ground though, but it's pretty rare down here in Cornwall. Right, so there we are. I think I've got time to play this.
Hi, this is Steve with a very short video to show you where to get the training for the indicators and tools we use inside Academy 55. So once you're logged into the members area, you'll see in the premium dashboard this section that's entitled Start Learning, and if you click here, that'll take you through to the learning library. Now, we'll say at this point, we highly recommend you watch each of these videos 2 or 3 times to get a full understanding of how everything works. Here you'll find tutorials on using the MT4 Trade Assistant and how to use the MT4 platform with the Trade Assistant. This is the longest video you'll find inside the platform. It's around 30 minutes long, well worth your time. Watch the video once, then maybe write a few questions down that you might have for yourself, and watch the video for a second time, and things will really start to make sense. By the time you watch it 3 times, you'll fully understand how everything works. So that's the longest video. It's about 30 minutes long, well worth your time, and then you can jump into individual trainings here for how to remove indicators. These videos are just a couple of minutes long. How to move MetaTrader around like you can in TradingView, Trading Assistant controls, how to do back testing in TradingView, how to draw vertical lines to mark out your hour, and so much more. And by the time you watch this video or see this video, there might be other trainings in this section. But everything here is well worth your time, and you find that, as I said a moment ago, from the main dashboard in the Start Learning section. Now, one more thing just to mention here. If you're looking for anything in particular, if you come down to the support name of FAQs, click on Get Support, and in this area you'll find a detailed FAQ section, and you can come through here. For example, if you're looking for an answer to a question about MetaTrader, have a look through these, and once you click through you'll find direct links to videos that give you answers to most of the questions that we get asked on a regular basis. So hopefully you found this useful, and back to your further training.
Thank you, Steve. As you can see from here, we haven't missed a thing. So just dragging this down a bit more. The cell is running out of steam a bit. And now hopefully we will maybe get ourselves in a position for a buy. Parabolosaurus flipped down below, but you know, it could be fooling us out, getting more buy orders, getting equity for themselves, and then going yet deeper, which we know that they want to do, but we don't know when. They might do that later on this morning, or even could be next week, you know. But this is the scenario we're looking at the minute. So, while we're doing that, I guess I'll throw the chat open. If anybody's got any thing they'd like to chat about, anything that they've seen here today, please. Nothing else really. Please write it in the chat, and then I'll get to see it, and if I can answer it, I will. Other than that, we just gonna spend a little bit of time waiting for things to develop, if indeed they will, within our time together. And if they don't, like I said before, we'll come back later on, maybe today. Just keep shifting these things around. I'm just going to do a little bit more while we're in the middle of nowhere, just on the EUR USD, just going on the hourly time frame, see if I can get a little bit of insight to where. I'm not saying I will, but just trying to understand. Like for here, we had that gap we was on about the other day on Friday. Indeed, they have filled that gap and even more so. Um, or on a deep sell, you would think that they're probably maybe even in this London session fill all of this in here. Well, maybe down to that line. Go on the 8 hour time frame. Usually when you have all this is like the most of this is the Asian session. Usually the Asian session is to hold price up. And usually what happens is if it's been selling during the Asian session, usually during the London session, it'll be buying. But it hasn't worked out that way today. Like I say, trend lines are very subjective. Yeah, very subjective. But we're underneath that sort of trend now for the buying. Very much looking to sell. This is the 8 hourly time frame. Four hourly, there's that in balance. Back to the hourly again. So possibly during the London session, maybe this will be filled in eventually. So really, yeah, so putting the indicator back on again. It's running out of steam for the sell, so we are going to have a bit of a retrace very soon, I suggest. But whether they do within our time together, who knows? Get rid of that line there as well. But we know we're in buy zone. Waiting for a retrace. Going in chat. Hang on. I'm muted. 8:42. Oh, right. It might have been then. No, I meant to be then. I'm not muted now, guys. Oh, okay now. Hello, Anna. Thanks for that. I'm prone to do that sometimes, aren't I? But just as well, not much is going on. Thanks for that. I'd never make an astronaut. Too many buttons to press. And end up heading for the sun while we're all sleeping. Wake up with a nice suntan. Right. I'm still immensely useful even in silence. My wife might disagree with that. Right, so this is where we are. I love these cryptic comments. Double-edged sword for the crown. Right. I think most of these comments are throwaway comments to be taken with a pinch of salt, unless you're really into uh, analyzing news and understand what everything is going on about. Me, I just trade what I see and try and get a little bit of insight, not too much though. Sometimes they make it more confusing than it needs to be. Old words like, for example, this candle here, a doji candle. Well, we don't need to call it a doji candle. It's an indecision candle. But they're harping back to the old days and giving names to different things, which just muddies the water a bit, really, as far as I'm concerned. But it's prudent to sort of know all the different names, just because some people refer to them by their names and you don't know what they're on about. Try and find out the names for things. Yeah, we're going deeper and deeper now. I don't think we will get this by in my session. Can't see it. But being on the minute candle, things can happen rather quickly. So, I mean, 1, 2, 3, 4, 5, 6 minutes, you dropped 80 down to there, 10 pips within 6 minutes. So presumably within 55, we could be, well, that's 10 pips up there. So within 6 minutes, we could be in the situation where we're looking to maybe take a buy, or even more than that, less than that. Yeah, blue skies everywhere out here, down here in Cornwall. Ah, there we go. A bit of volume coming in for the buy. But is it just going up there to sort that imbalance? Or it might be sorting out this imbalance, that imbalance. But these are lower time frame, well, minute imbalances, so they're not as much confirmation as a this imbalance here, for example. This is imbalance drawn out on the 4 hourly and the daily. So it's more important to do that one than it is to do these. But they've got to be done. And up here as well. These have got to be sorted out. But which ones are more important for them to sort out? Raj says blue skies in Ascot. Great. I hope it's all over the country. Any international people watching this or the recording? Ascot is more or less in the wow near the middle of England. Where I am is on the southwest tip of England, very broadly speaking. Right, so now look at this. All of a sudden, we oh, I can't, it went off again. But I'll get my lines ready. I want to go 2.2 pips, so I'll write 22 in there. That's minimum. It might be a bit more before we get the green, green, green. But all of a sudden now, I mean, I'm not getting too excited because we might still go sideways and then decide to go even deeper. But the volume has just started to go green. This here, when that goes green, if it carries on up, this is where I want to put my stop loss. But my trend line is pointing towards like 5 o'clock. We want it to put towards 3 o'clock at least and go green. Just quickly have a look on the 5 minute and see. Now look, we've got a parabolic soft flip. So that gives you an indication that we might have a little bit of a buy. Nice. So this price goes above there, that buy alert will be back again, I guess. Are we going up to fill all these imbalances before turning around again? The trend line is now getting towards three o'clock. Ah, the buy flickered there, look. The wave has just gone green. I'm going to lock my stop loss in there. Not pressing buy yet. Anticipating that trend line turning green. Waiting for price to at least get above this area here where it stopped for 4 minutes. I think I'm prepared to go to like 4 or 5 pips stop loss, really. Just to give it extra confirmation that we aren't indeed just going sideways and coming down again. Still might do that, of course. There's not a lot of volume around. Now we're breaking above that now. Anticipating the trend line to turn green at any time. Still not convinced just yet. Let's get a little bit more confirmation. I might wait to go to 4 pips actually. I'm on 3.4 at the moment, so very close to it. There's hardly any volume around, unfortunately. So are they trying to trick us out? But at the end of the day, I lose 1% if indeed it does come back down again. The trend line's gone green now, as you notice. So everything's technically good to go. But because of the lack of volume, I'm a bit wary of this. Waiting for a little bit more confirmation, really. Biding my time. The lack of volume is quite worrying. Well, not worried. Sorry, that's the wrong word. You've got to factor that into your trading. Nothing's hardly moving. So I'd much rather wait for a bigger stop loss to get a little bit more confirmation, a little bit more distance between stop loss and entry. Because the last 4 candles have been indecision candles, although they've been heading up. But there's so little volume around, it's then all of a sudden you might get volume all of a sudden pushes it up even more. And that's, I guess, when I will be in if that ever does happen. And I'm past 9 o'clock now, so I'm on overtime. Look at that. There's just nothing there, is there? I'm waiting for a bit of a commitment. Ah, there we are. It's a waste of time trying to read these because the volume is so minute that it's not really worth your time to try and read too much into these candles because we are on the minute candle, and one candle could make the difference between taking you out or anything like that at this stage. Yeah, I'm waiting, definitely waiting for a higher stop loss to entry ratio before I commit myself because of the lack of volume and the sideways movement and all that carry on. I want to be a bit more sure of this buy is actually going to happen. Yep, I'm going to go in now. And 4.8 pips, not bad. But also recognizing the fact that if it comes down and um, takes me out, so be it. I've lost 1%. May trade later on today, but because of this blue sky, I may not. I don't know. Depends on my life choices. Like I say, I do me, you do you. But what I'm going to do now, guys, I'm going to let you watch this. I'm going to go on mute and I'm going to make myself a cup of tea. So you can carry on watching this till its conclusion one way or the other. But I won't be here to comment on anything at all. Hang on, I've got something else in chat before we go. Anna R says, thanks, David. You're welcome, Anna. And I'll leave you with this one way or the other. So see you guys tomorrow. Well, there you go. As you can see, we've lost. But hey ho, it's only 1%. And come back again later on today if you feel like it. Thanks very much for watching and speak to you soon. Hello, Academy 55. As you can see, I'm on the EUR USD. I'm on a buy on Thursday, the 6th of February. It's now 4:05 in the afternoon here in the UK. Let's see how this one gets on. Because of the length of time and the ranging market we are in, I am quite happy with, instead of going for 2%, going for 1%, which is there. So this is where we're going to stay. At 1%. So thanks very much for your time. I had a break-even day today, and we'll speak soon. Bye for now. Bye for now.